Welcome back to Yahoo Finance Live, and we are a few moments away from that opening well on Wall Street in pre-market. It could be another challenging session after the big sell-off on Friday, seeing all three major indices down severely here in the pre-markets. And really that trigger point, like we were talking about earlier in the show, was that much hotter than expected CPI, or Consumer Price Index report on Friday, which ratcheted up fears about Fed rate hikes.
Yeah.
When you go from a Friday session, and I think this is what's extremely important too, when you go from a Friday session of a precipitous drop like we saw into that same sentiment still being very much present on Monday, that, as we've discussed with Jared Blickery in the past, that is a recipe for disaster over that 2-day period and even setting up for the rest of this week potentially too.
Yeah, and when you talk about changing Fed funds futures expectations and changing market expectations for how many times the Fed is going to raise rates, just to remind you, again, the market is now pricing in 175 basis points increases by September. What does that mean? That means we could get a 75 basis point increase. Now, Jay Powell has said that wasn't in the plan, but that doesn't mean that they could sort of change the plans as time goes on. He's also said they're going to be data dependent.
Yeah.
The data we've gotten
inflation's transitory
has been pretty lousy. There you have the opening bell on this Monday morning for what looks like is going to presage quite a lot of selling unless we get some sort of big reversal before day's end, which of course is not out of the question from what we have seen in the recent past. Our opening bell coverage is sponsored by Flex Shares here as we have this risk-off environment continuing. And your point is a good one, Brad, the point that Jared makes frequently, which is if that risk-off continues through the weekend and resumes on Monday, it is definitely not a good sign. We also heard what Amy Wu Silverman of RBC was just saying, which is that now there is implied pricing in the market that we could see another 10, 15%.
Positioning for extremes, extreme tail events.
Exactly.
I have not heard a lot of other strategists come out and say that, but that definitely left an impression on me.
Well, because a lot of it happens in the options market, which is she is so focused on. I mean, that's what the options market does, right? When there are these times of trepidation and risk aversion going on in the market, how do you express that? Well, you express it through options. So that's where we see a lot of that activity concentrated, perhaps.
Absolutely. I'm taking a look at the VIX right now, and once things really get calibrated here, I mean, we had ended the week, we were already seeing 32 levels. We'll see if that continues to tick up higher here as well today.
And some of the stocks impacted by the crypto sell-off include we've been talking about them all morning long, MicroStrategy, Coinbase, Marathon Digital, and Riot Blockchain all down here in the early going. And wow, this crypto route is certainly spreading, and it's spreading like wildfire, guys. And again, the trigger point, higher interest rates and potentially much higher interest rates from the Fed, I think spooking a lot of those risk takers out there.
Yeah, no, we don't always sort of lay out why are higher interest rates such a problem for high growth companies or for companies generally, right? You tend to see multiple compression when you have higher rates. Companies that have debt on the balance sheet, it costs them more to service that debt or to take on new debt, for example, as well, because you're going to get it at a higher rate. Just like if you're taking out a mortgage right now, you're going to pay more for that mortgage. You're going to pay a higher rate on that mortgage, so that affects companies as well. So there's a lot of different sort of ways that higher rates can affect a company. There's also, of course, as we've been talking about, the move into the U.S. dollar as a result of all of this and the effect that has on these companies.
What's particularly interesting, too, is the companies that also are exposed to cryptocurrency have Bitcoin on their balance sheets as well. You think about names like Block, Tesla, even more so MicroStrategy as well. All of these companies that have either played directly, and Coinbase, how could I forget them, that have either played as a platform in the crypto landscape or have played as a holder within their portfolio of investments in crypto as well. We're seeing them get hit hard on the day with some of these continued declines that we're seeing in the cryptocurrency landscape.
We were also talking earlier on about the potential damage to trust by this move. Where are the institutions? I would argue what we're seeing right now in crypto, for it to go from a total market cap of $3 trillion late last year to under $1 trillion now. Why would an institution get involved with this space at all? You have regulatory risk and you have these wild price changes.
Well, but they still are. We are still having quite a number of institutions that are still moving ahead with crypto plans. What was the latest? Fidelity, right? Starting some new crypto services.
Right. Yeah. And it's in a crypto winter or a bear market in crypto when you would see some of those moves more into it. The difference now is the number of tech companies that are either saying, as part of our own cost reduction, we're going to either freeze hiring or not hire at the same pace that we were before. But some of the Fidelities of the world still continuing forward, which makes it even more remarkable in that instance. But to your earlier point, what I would say is that what's remarkable to me is that you're seeing a pullback even in Ether. Some of the most viable cryptocurrency or blockchain networks right now are even being challenged because the consensus model, that is a protocol that has been tried, that's true, and that is most leaned into. And so to see Ethereum also not just breaking below 1,700, but not even holding on to 1,500 at these levels too, which were some of the bottoms that had been called coming into this most recent decline as well.
It's not just everything crypto adjacent. We've got big cap tech that is down as well. You were talking about this earlier, Brad. Meta, Amazon, Alphabet, Microsoft, Google, all of them in the red, and not just in the red, but pretty deeply in the red as well. And even if you're looking at a Microsoft of the world, which has seemed to have been navigating this time relatively well, the market, again, is selling first and asking questions later and looking at these companies that have been relatively high growth. I guess Amazon more falls into that category than the likes of Microsoft, and they're selling them off. I mean, what's also interesting, just a quick note here, it's not just tech. It's just not just crypto. Our Miles Udlin just tweeting about all of the 52-week low alerts he is getting from his Yahoo Finance app right now. Oracle, Moody's, Luminar, Carnival Cruise Lines, Wells Fargo, Figs, Zillow, RealReal. So it's like the smaller, more recent entrants into the market that are on the tech side. Wells Fargo,
You
which
see
is
no one
obviously on the
defending
finance
these stocks. I don't see any analysts saying, you know what, Carnival Cruise Line, you know what, Miles Udlin, that is a screaming buy. I see none of that happening out there. In fact, I see more analysts out here dropping the hammer on their ratings, despite a lot of these stocks trading at 52-week lows, which is alarming.